The AI revolution is here, but many analysts warn it looks a lot like the dot-com bubble. Why? Because a huge amount of market value is now dangerously concentrated in just a few companies, creating a massive hidden risk. Companies are pouring billions into AI, and a small group of stocks, the Magnificent Seven, now dominate the entire market. In fact, just 10 companies make up between 35% and 42% of the S&P 500. That's a higher concentration than at the peak of the dot-com bubble. This creates an illusion of safety. Your diversified retirement fund now hinges on the success of just a handful of stocks. We're told this is a new industrial revolution, but we've heard that before. In the 90s, companies were valued on clicks. Today, it's tokens processed. The question is whether this spending translates to sustainable growth. Now, it's true that today's tech giants have real earnings, unlike the profitless startups of the 90s, but that success itself creates risk. Remember when interest rates rose in 2022? The Magnificent Seven stocks fell by an average of 50%. A total collapse isn't needed to cause a crisis. If just one or two of these giants stumble, or even just slow down, the ripple effect could be massive as inflated market expectations finally come back to reality. History shows that after a crash, the core technology survives. The dot-com bust gave way to the long-term success of Amazon and eBay. A potential AI correction would be similar. The trillions being spent on infrastructure, the data centers and chips, are real assets that will power our economy for decades. The companies providing these essential picks and shovels are positioned to be far more resilient. The survivors will be those creating real value and generating cash flow, not just hype. Separating the real opportunity from the speculation is critical. If you want to understand which parts of the AI economy are built to last, make sure you subscribe and hit the bell for more in-depth analysis. So are we in a bubble? The debate is fierce. But what's undeniable is that risk has become dangerously concentrated. The financial futures of millions now depend on the performance of a few giant companies. The question is no longer if AI will change the world, but whether its current market valuation can be sustained. Now is the time to be informed and understand where your money is truly invested.